And joining me as we unpack those moves further is Odwa Magwentshu from Trive Investments. Odwa, good evening, or good afternoon rather. Thank you for your time.
Good afternoon, Notando.
All right, we all know that we are on Fed watch as usual, as it's been throughout 2023 actually. But of course, there are other interesting data points that are emerging, maybe starting off in England. We've seen that GDP slipped by 0.3%, but the market has also priced in an 100% chance of a hold. Do you share those sentiments?
Yes, I do think that the UK, especially with tomorrow interest rate hikes, they should stay holding for the time being. Even though they're still far from the target of 2%, we are seeing that the economy is starting to cool off a bit that side.
I must also ask you about what we are then anticipating from the Fed there. It looks like the general consensus here is that they will hold and they will hold until they get to a cut. I'm wondering about risk factors that the Fed may have to, consider at this point and how important the language around the decision may be.
I think, as you said, the consensus right now is a hold. However, luckily yesterday when they released their inflation rate numbers, we did see a slowing in that side, and mainly because of, as you said earlier in the report, that fuel prices were cooler in the recent weeks. So I think that is what you would want to look at the moment. We could see increasing in fuel prices if tightening by the OPEC continues, but at the moment that's what they're looking at, and language is very important, or not to scare the market in tomorrow's conversation or release rather, into thinking that there could be further hikes in the near future.
Did we see the dollar strengthen on the back of that CPI print? Curious there because we did see a cooling.
Yes, I think it's just investors being happy, or dollar investors rather. And we have to take into account that the inflation rate, interest rate rather, is still quite high according to US standards. And that could be the reasoning behind the strengthening in the dollar.
I'm keen to look over to China now. We have the government committing to more stimulus, this time looking inward at domestic demand. I'm wondering what that could look like, boosting consumer confidence, for instance, business confidence within China, because we've seen this year of attempts at stimulus, although it really hasn't, bared much fruit.
And I think that was the necessity for this current meeting that they had. They have stated earlier in the year that they are looking to stimulate the country rather, and it wasn't by holding on as anticipated, and that's why now they're looking at further stimuluses towards the country rather. However, they still haven't given us clear growth targets as well. And I think that's just not wanting to overstate their confidence in what they're going to do.
We don't expect the Chinese economy to grow, shooting the lights out anymore. Still expecting it to grow at around 5%. Is this bad for China? Of course, if we're speaking about South Africa, we'd be writing home and telling everybody about it. But for China, around 5%, Odwa, is that lackluster?
For China's, in recent history, they've had a very good growth historically, and that's why it is lackluster in that sense. However, you also do need to take into consideration the real estate economy, which is in a terrible state right now. And that's why I think that they're not looking at shooting the lights out, if you may. So right now it's more on stabilizing the economy rather than trying to shoot the lights out.
Let's move over to South Africa now, maybe looking at some company news. Thungela out with a pre-close statement. They've maintained their guidance, in spite of what we are seeing at Transnet. It tells me that it really is matters of building resilience and making, other plans, which is exactly what managers and executive bodies should be doing during the economic environment that we find ourselves in.
Yes, Tungela, I mean, I'm quite impressed. They have managed to stay on target. They've implemented a lot of, policies or management decisions that have helped them stay on track. And also the acquisition of Ensham. That also played a nice role in them, boosting their capabilities as well. And also they bought the company at a discount, also receiving a cash injection of 800 million rands. So I think the business has been managed well, and they're also looking to still, pay their shareholders for holding the company. I think, to your point, management of the business has been great, and that's what we're seeing now.
We see that share price up more than 1.5% with the investors cheering that on. I'm keen to get your stock pick in a bit, but first I'd like us to reflect on counters that have found favor with your industry peers.
Honeywell International. It's difficult to describe in a sentence or two, but it's one of those technology software companies that's really at the coalface of the economy. They operate in the commercial aerospace side, in building space, just trying to do things more efficiently. In the life sciences space, the healthcare medical space, they create tools and software that helps you do things smarter, faster, and it's just about improving our life in different spheres. And it's one of those companies that we like from a growth and a quality point of view. And it's been up and down this year. It's sort of in the middle of the road now, but it's certainly one we like for a growth and quality portfolio.
All right, Odwa, Honeywell International, that's one we don't hear of often.
100%. It was also first for me, but I think the business is quite well. I had some time to look at their financials. The business has been growing quite great, especially after the hiccup of 2020. I think it is a great business. However, I am a bit concerned with the debt that they have as a business, especially in this high interest rate environment we are in.
And which counter do you love this afternoon?
Right now, for me, I have to go with Clicks. I think that the business has been doing well. We've been having a steady near double-digit growth in revenue year on year, and now also talking about expanding in with 40 new stores as well. I think that's going to be great, and I believe they also did, purchase some businesses as well recently. So I think growth-wise, this business is one. And looking at the current trading price at 318. Just tested 320 as a support level. I think that the business is quite doing well at the moment.
Well, Odwa, an absolute pleasure having you this afternoon. Thank you so much for your time. That was Odwa Magwentshu from Trive Investments.